Fellow traders, I'm making this video to update on the situation of markets. This time, the entire situation, entire environment throughout the globe had changed, and because all uncertainty about US-China trade deal and Brexit has faded away with uh, tremendous victory of Boris Johnson in the UK and a clear statement from Donald Trump about US-China trade deal. There are few analysts still talking about uncertainty of US-China trade deal, but I don't believe in any negative news about US-China trade deal anymore, because there is no retaliation from the China against US, despite US has intervened in the matter of Hong Kong recently. And despite this intervention of US on Hong Kong, if China didn't retaliate, and now if Trump is telling clearly that they have made the deal to avert tariff implementation on 15th December, then definitely there is positive things going on between US and China, and where we can believe that this deal is going to happen. Second most important thing is Trump is a great negotiator, and I believe he has been able to negotiate some mutual terms with China ahead of presidential election in the US, because Trump is going to use this as the election campaign gimmick that he has been successful in making a deal with China. So he will show this deal as his success, his result. So that's why he is trying his best to make a deal. So that's it about the US-China trade deal and a Brexit, and this had changed the market situation. And this time, why I'm showing you the chart of USD CFAs. CHF is behaving in a very different way. When the news came about the US-China trade deal, Swiss franc, in line with Japanese yen, behave just like a safe haven currency. And whenever there is a reduction in the global tensions like US-China trade deal, then obviously safe haven currency is lose. So there was a loss in Swiss franc, as well as there was loss in Japanese yen. There was a tremendous loss in Japanese yen, but the Swiss franc also behaved the same way, and USD CHF went above our entry point, because if you remember the second last video of this sell trade in buy in USD CHF, then I had bought somewhere around this area. So market gave me some positive pips here, but I honestly didn't close the position, because I was expecting more movement to the upside in line with USD JPY movement. So I stayed with this position, but this is where I closed the position, because if you look at this candle which opened today after start of European session, this is when London start, but before the start of London, European session already starts with stock market opening in France and Germany. So this is where European session started, and market started falling furiously. So when it crossed below this low, this was the spike of daily closing because of Brexit. So I didn't take this spike into my account. I considered this low. So here I exited my position with negative few pips, something around from this point to this point, it was 20 pips, and it is part of trading. So we have to exit the position and we have to move on to the next opportunity. Although it wasn't a big loss, it wasn't a big deal for my overall trading performance. What I'm trying to tell you here is to move on to next opportunity, and we have next opportunity in GBP USD. So let's go to the GBP USD, and I'll show you what is the opportunity there. This movement of GBP USD, there is no gap here on the chart, but if you look at in many other brokers, there was a gap between or closing price of previous day and opening price of today, because of the tremendous victory of Boris Johnson in the UK, which has strengthened a good Brexit deal, and which has strengthened the sentiment that Brexit is going to happen. So now nobody is going to sell pound as long as Boris Johnson is there in charge, and the Brexit deal is going on. So most probably 99.99% analysts and traders believe that he will certainly be successful in making a good Brexit deal with Europe. Recently, European Union is also willing to give a good deal with some kind of mutual benefit with for European Union, as well as for Britain, because both of these parties, European Union as well as Britain, have been losing in terms of their economic growth for entire 3 years. So both are now in line to make progress in this Brexit, and Brexit is going to happen. So GBP USD will be bullish, and there is probability that it will even go to 1.4 area in upcoming weeks. So I'm not targeting 1.4 as of now. We have a trade setup here on the 1 hour time frame, where I am just taking a trade. In fact, I have entered my buy position right after formation of this hammer. With such kind of furious upward move, I'm not expecting a bigger retracement, despite there can be a bigger retracement, but I have entered when market just touched 30% retracement, and I have mentioned many times in my analysis that I take 30% retracement as a benchmark for retracement. I just don't consider the Fibonacci level 23.6 and 38.2. I even consider 30% retracement. So this is what Fibonacci from here to this point. Market came to around 30% and just made a hammer candle. And here I just after completion of this hammer candle, which completed at 34.15 and 5, and I entered my buy position. So the plan here is to not place any stop loss, and not to go short, even for the short term. No short position, neither for long term nor for short term. So I'll be in the long position, and I'll be holding on to this position. If there will be bigger fall to the downside, we can hedge the position, we can enter sell against the buy, and if market will keep falling, maybe this will come to 61.8 or 50% anywhere. But if we have a sell position to hedge our buy, then we'll have to keep monitoring market always to look for any bullish candle pattern, even on the half an hour time frame. And if you will see any candle pattern being formed on any speed bigger than the speed of fall, if fall happens, right now there is chance that fall will not happen, it will return right back from here. But if fall happens, then you have to be looking closely and immediately close your sell position. If you, by the way, enter sell position to hedge your buy if market goes down, if it breaks below this point. So this is my opinion, but the most suggested idea is not to sell and just hold on to the buy position. But it is your choice, because we all are retail traders here. Most of us are retail traders, and we have to manage our position with every single movement of every single pip. So if it will fall down to, let's say, 78.6, 61.8, and then it will return. So by the time it will return, we'll perhaps be running in a big drawdown if we have a buy position here. So we can enter a sell against buy, and then we'll be looking for any further formation of the buy bullish candle, then exit the sell, hold on to the buy. So the basic idea is here to hold on to buy and enter the sell for temporary hedging the buy position, temporary keeping your floating drawdown mitigated, just for the mitigation of drawdown. Otherwise, I'm not suggesting a sell trade here. So this is GBP USD, and the target of GBP USD, we are not targeting right now much, because anytime soon retracement may take place, a significant retracement, when this all sentiment will be absolutely priced in. And until the next news coming from the London, market will be just slowing down, stagnating to the sideways, and then gradually it will take a retracement to the downside until until any further statement about the Brexit will come. But this will be a very slow process, so sell position is never suggested. Right now our target is the last high. The last high which has recently been touched is 35.149. In many brokers this high is slightly different, but we are targeting 1.35. So even market can go to 1.35 again, it can retest 1.35, and then it may stagnate to the sideways, or maybe it will very slowly go to the downside if there will be no further statement coming from the London. So this is one thing. Another thing, this is a one buy trade setup. I have another buy trade setup in pound, which I am going to take on GBP JPY, and reason is apparent. I'll show you. FX USD JPY, enter. You can clearly see that the JPY is moving to the next target, and if we look at the previous levels, then we are going to reach the psychological level 110.00, which is 161.8% of this move. But this is not significant. Let me remove this. In simple way, if you look at the behavior of USD JPY, JPY generally breaks the previous high and it goes around 15 to 20 pips above the previous high. So if you compare this previous high, this high, this high, and this high, so whenever it has broken above the previous high, it has gone 15 20 pips above. And if we look at the high of previous candle, this is already 108.92 109.727. so this time if it will break this high, and it is going to break, because we cannot right now say that the sentiment of good deal between US and China has completely been priced in. We cannot say that, because whenever such kind of news come in the market, USD JPY keeps going gradually to the upside, just like you can see this. I mean movement doesn't stop in a single day or the second day. If you look at any swing, you can find any swing in which movement is stopped in 2 days, whether this was this swing. So and 110 is the psychological level. So while GBP USD is going up, USD JPY also going up, then the chances of GBP JPY going up is even bigger than the chance of GBP USD going up. So what we can do is we can take buy position in GBPY instead of taking buy position in GBP JPY instead of taking buy position in GBP USD. This is one idea. The another idea is to split our risk into two positions, or take multiple position, one position in GBP USD and another one position in GBP JPY. So if we part of GBP JPY, FX column GBP JPY, in GBP JPY I am just targeting the recent high. Recent high was if you look at the recent high, it was made let me just GBP JPY daily candle. Let me put my pointer here, and the high of this candle is 147.95. so we can target 148. Market with USD JPY going up to 110 and GBP USD going to test back 1.35, GBP JPY will also go to 148.00. so here we can enter the buy position now. The candle setup on 1 hour time frame is exactly similar to what we see on GBP USD, this similar hammer pattern, but with the help of USD JPY going up, we will see bigger move here. So it will go back, and we will see 148.00 area. And the idea here also is the same. If market breaks below a low of this hammer, then obviously hammer will be invalidated. There will be some downward retracement. So we can enter sell just to has the risk of buy position to mitigate our floating loss, and wait for further formation of any bullish candle. Maybe this can be an engulfing bullish candle, just like this. You can see this was an engulfing bullish candle. Maybe anything. You could keep looking at 30-minute time frame and look for any candle. If this will happen, immediately close your sell position and just hold on to buy. But right now, neither in GBP USD nor in GBP JPY, we can see that it's going down. Right now I don't see anything, because market is holding here, and there is chance that it will go to the upside right from here without any further fall. So anything can happen. That's why I discussed both the scenario. If it will break the hammer to the downside, then what we are going to do, and if doesn't break, then simply we are going to hold on to our target 148. So that's all about the GBP USD and GBP JPY, and probably we are gonna recover our losses of USD CHF and recent trades, which were based on uh, uncertainty of US-China trade deal, besides other technical and fundamental factor too. But those last two trade setups failed because of the very positive news in US-China trade talks. So it is part of trading. It happens. Nothing to worry about that. So let's make profit this time in GBP USD and GBP JPY. That's all about the video. Thank you for watching. If you have any comment about any video, any previous analysis, anything, any criticism, anything, feel free to comment. We can discuss. All right. Thank you. Bye bye. Thank you for watching.